Good evening from Hong Kong. I'm Aidan Gregory, Senior Correspondent at InsuranceAsia News, and I'm here with Mark O'Brien, CEO of APAC at Gallagher Re. Welcome, Mark, and thanks for agreeing to join us this evening.
Pleasure. Good to see you. Thanks, Aidan.
It's been an interesting start to the year. The recent 1/1 renewal reports show that the reinsurance market in APAC is undergoing, pretty material softening. How would you assess the dynamics of the recent renewal season? And what are the major trends that you guys have observed?
Yeah, look, thanks. I mean, I think that the Gallagher Re first view report captured the renewal really nicely. I mean, I think it was a renewal of choice, an opportunity for clients. A lot of our clients had experienced a pretty tough time over the last few years, which is all well documented. I think the build up to the renewal was a bit more predictable this year. We had all been through a process of slow softening during 2025. So I think there was more of an understanding as to what was achievable as we went into the 1st of January renewal season. But as you say, I think it was the pricing was a little bit more pronounced than we expected it to be. But a lot of that is driven by the abundant capacity that was in the market. A soft market or a hard market is defined by the amount of capacity that's available. And certainly, as we went into 1/1, it became increasingly evident that there was a lot of capacity chasing the same risk. So I think it turned out to be a much better renewal season than much of our clients expected, and I think even to some degree took the broking community slightly by surprise in terms of the willingness of reinsurers to deploy capacity at the prices they did. So I think it was a good and pleasing outcome for most of our clients.
We clearly saw a lot of movement on price, but was there much movement on terms and conditions from the reinsurers?
Yeah, I mean, I think that there was a push on terms and conditions as well, for sure, during the renewal. I mean, price was at the forefront. I mean, clients definitely tried to take advantage of the pricing environment. So that was, shall we say, the first priority of most of our clients was to bring their reinsurance costs down as much as they possibly could. However, it did depend quite a lot on individual client, on portfolio, on reinsurer appetite. So where there were some losses, it wasn't straightforward for clients just to get a price reduction. There was a push on terms and conditions. During the hard market, we saw quite a lot of changes, particularly not just price changes, but particularly on proportional treaties, whereby loss participation clauses were tightened, loss corridors were implemented, loss caps were implemented, sliding scales of commission became more in the reinsurer's favour. So during this renewal, some clients used the softening market as a way of improving some of those terms and conditions. So we did see a change in some of the loss corridors. Some loss participation clauses were loosened. We didn't see a huge push on a change in exclusions. It was generally around a financial impact for the client. So that tends to be either a price change or a terms and conditions change that affects commissions and corridors. So clients certainly took advantage of that. It was primarily, from our perspective, a rate push this year, but we did also see some terms and conditions change.
And looking forward to 2026, how do you see these ongoing market forces being carried forward into this year? Is the market going to continue on this current trajectory as 2026 progresses?
Yeah, I mean, we can't see an immediate change to the amount of capacity that's available, which underpins the sort of the cycle we're in at the moment. And also, unless there is a major event, whether that's a major catastrophe, localized or multi-peril, or a change in the economic conditions within the industry, I think we expect this trend to continue. To what extent it pushes further is yet to be seen. But unless there's anything fundamental, I expect it just to continue as it is. I mean, for some territories, this would be coming into the third renewal. where the softening market has come back. So to the degree it continues at the same pace, we'll see. But I don't expect any fundamental changes unless there is a fundamental shift in a dynamic within the industry.
There's been a lot of discussion, in the market here in APAC about regulatory changes and how that's going to impact the reinsurers, particularly around capital requirements and solvency rules. Um, what are the key the key themes that you see that will shape the reinsurance markets in the near term? Particularly from a regulatory standpoint.
Yeah, I mean, look, I think you've hit the nail on the head there with the capital requirements, the equity requirements. I mean, I think one characteristic of the industry, particularly in Southeast Asia for many years, is the sheer number of insurance companies that operate in any one market. Each of the markets in Southeast Asia has gone through various cycles themselves on the direct side. It's generally been a softening trend for some years. Certain lines of business have hardened, but there is still the view, I think, from a regulator standpoint, that there is a lot of competition, which to some degree encourages a better customer experience, but quite often it's a headache for a regulator. If you look at Indonesia as a great example of change that's coming, or the change has been implemented for the future, where the equity requirements for insurance and reinsurance companies are increasing, and that sort of kicks in gradually over the next few years. That will then, if it's followed through, will then result in consolidation, result in M&A. So it's particularly for the broking industry, it's a great space to operate in. We have a lot of advice that we can give on both sides of the seller and the buyer. There's reinsurance vehicles that can be used to help lubricate the M&A process. So I expect that to be a hot topic, certainly over the next 12 months. It has been building for some time now. So from a regulatory standpoint, that would be for sure the number one change that I think is going to impact the market.
Gallagher Re, of course, has made some big commitments to APAC, and broader growth in the region. There's the acquisitions in China and Australia recently. What are the brokers' strategic ambitions in the region going forward as 2026 progresses?
Yeah, I mean, it's been really busy for Gallagher Re over the last 12 months, which is fantastic. We've got a general push for growth everywhere globally. And our job is to continue that growth push within the Asia Pacific region. As you say, China finally closing on the China license this year has been amazing. And we are pushing through the sort of operational standards we need in terms of getting that up to speed. The team have been incredible in China, and they're now fully on board a Gallagher Re platform. The Steadfast repurchase in Australia was fabulous for us, culturally fantastic, gives us some additional ammunition in terms of the transactional environment. We've also made a lot of talent, people acquisition across the region. Within the reinsurance broking space, the available opportunities around M&A are less compared to the insurance world. So M&A for us also includes people. So we've onboarded a lot of production talent during 2025, which we're delighted about. So going into 2026, it's kind of twofold. First and foremost, we've got to bed in that talent, bed in that M&A to make sure that we're operating culturally as one, and we take advantage of the greater skill set that we have. But also a continued push, right? We're always looking for M&A opportunities. We're always looking for good people. It's all about putting together a team that clients want to do business with. So I think we've gone a long way to achieving an enviable reinsurance team within the whole of Asia during 2025, and we will continue to do so in 2026.
In terms of organic growth, are there any particular lines and markets where you're actively looking to add staff and grow?
Yes, for us, market share growth, generally speaking, across the board is really important, and all of the teams are tasked with doing that. At the same time, there are some territories of potential bigger opportunity where we are slightly lighter on market share. It's not to say our entire focus is going to be there, but you don't have to look beyond the markets like India, Thailand, South Korea, which are really significant markets within the Asia region, say ex-Japan, where we'd like to be bigger. So we are focusing somewhat on what we need to do in those markets in order to strengthen our market share. So that's generally from a territory perspective. On a line of business, our life and health business continues to be a standout growth engine for Gallagher Re and APAC in particular. So we're going to bed that in and look to grow from a people and client perspective everywhere within Asia Pacific. Some of the bigger life and health markets like China, India, and Korea will quite obviously for us be more of a focus because there's so much opportunity there. Agriculture to some degree also is an area where we could be stronger and have a bigger market share. So again, that's a bit of a focus, but all-round growth is important for us within Gallagher Re.
I've really enjoyed listening to your answers, Mark. Thanks very much for joining me this evening. I'm sure we'll have lots to talk about going forward as the reinsurance landscape in Asia it continues to evolve very rapidly.
Pleasure. Thank you.